If there's one thing you want to improve on in the Nigerian stock markets, it is when to buy. Knowing what to buy and when to buy are two different things entirely. Because in knowing what to buy, you focus on fundamental analysis, which is what a lot of brokers do as investors. But if you want to make good money, if you want to improve your ROI in the Nigerian stock market, you must perfect the period within which a stock or the period within which you should be buying aggressively. It is not every time you have money in your stock trading account or investment account that you should be buying stock. Sometimes people come to me and say, oh, I just deposited XYZ, 5 million, 3 million, 4 million, 10 million, 20 million, 100K, 50K. What should I buy? No, it doesn't work like that. There are times where I fund my account and in the next 1 week, I may not trade a stock. Why? Because I'm not saying the type of stock I should buy, or maybe the market generally is not favorable for buy entry. So in this video, I want to teach you the strategies to buy Nigerian stocks, especially the best time to invest with 99% success rate. Yes, 99% success rate. This is very, very important. You must understand the period within which a stock is a buy. You must know that period within which you should be buying Nigerian stock. You must know when you should be buying. You must know when you should be selling. Very, very important. If you look at my follow recommendations right here, most of these stock here are time bound. I don't just recommend stocks randomly. I look at the state of the market. That is why in Glofolio, one thing I try to do in my WhatsApp group is to continually update members on the state of the market so that when I'm not recommending a stock, they know why. They just sit down and then they are wondering, oh, why am I not recommending stock? I will not trading again. But when I tell them where the market is, when I tell them what the market is like, and the technical status of the market, they are able to understand why I am not recommending a stock at that point. At the same time, I'll also give them a hint on when we should buy, on when I'm likely going to watch out for. And once that condition plays out, then it's time for us to enter. So those things are very important when it comes to investing or trading Nigerian stocks. You don't want to buy Nigerian stocks and tomorrow everything is crashing and then you assume that the Nigerian stock market is bad. For instance, if you enter the market the last time around February, and then you see that a lot of stock dip from February down to April, you will see if you're not careful, you will just want to assume that oh, Nigerian market is not profitable. It's not the same market they say is going up, and now my portfolio is down. You'll be discouraged. Why? Because you don't understand the state of the market. So I want to show you how to buy Nigerian stocks the right time, like how to know when to enter the market. So before I continue, here's my usual disclaimer. The ideas shared in this video are based on my personal research and calculations. Kindly do your due diligence before you invest. And please note that the stock market comes with a lot of risk due to uncertainties. Please also vet my recommendation based on your risk profile. So let's us continue. Now, if you want to invest in Nigerian market or you want to buy Nigerian stock, either for growth, dividend, or whatever, even dividend growth stock too has time. Like for me, I've been accumulating a lot of dividend growth stock within this period because I'm looking at how to profit from capital appreciation as well as collect good dividend. And this period is actually the best to do that. I'll be having a webinar with them this weekend and I will share some of my insights, some of the reasons why they should always use May, June, July to buy Nigerian stock. All right, so let's continue. Understanding trend. If you want to profit from Nigerian markets, you must understand trend. You must understand trend. Just like any other stock markets, there is a bull and there's a bear market in Nigeria. So you must know whether we are in a bull market. You must know when we're in a bull market or a bear market. Now, a bull market or a bull period are intervals where a significant number of stocks go up compared to the stocks that dip. So when you have more companies recording top gainers being in the green territory, then we are in a bull market. Now, a bull market is not defined by market going up today and then tomorrow it's coming down. No, you don't use 1 day, 2 day, or even 1 week move to ascertain a bull market. You look at the trend. I'm going to show you some of the things I do. Now, you likely see the NSC All Share Index record gains, reaching new highs, and then helping investors pocket billions of profits. That's bull market. Bull markets run from months to years. Now, let's continue. Now, we also have the short-term bull and then a long-term bull. So you can see that even in the bull market, you need to know whether we're in a short-term bull or a long-term bull. Very important, because a short-term bull is what you need to trade, while a long-term bull is what you need to invest. So many of you have been reporting increased return in the Nigerian stock market in the last 5 years, 3 years. The reason is we have been in a long-term bull. It's as simple as that. If the market had been in a long-term bear, it would be difficult to make that kind of return. So accurate knowledge is very key. Some of you might just want to jump into the market and say, oh, I also want to make my next big return, 10,000%, from not understanding whether the long-term bull we are is still intact or not. Because at the end of the day, if you don't follow this trend, you end up losing money. Because by the time the market turns to bear, it becomes a problem. So what gives you confidence to invest for a long term is to check whether we're still in a long-term bull. Very, very important. I actually shared one video on how to invest in the Nigerian stock market for a long time. And one of the major secrets I shared there was watch out for a sector that has been hot for an extended period of time. So if you want to invest for a long time, always look for sectors that have been hot for an extended period of time. So we have short-term bull. Short-term bulls are for traders, while long-term bulls are for investors. I said that before. Bear markets, on the other hand, are intervals where the market is dropping and forming successive lows. We have a large number of stocks closing in the negative territory and positive. So when you see a larger number of stock closing in negative territory, then it means we are in a bear market. So it's important you know when we are in a bull or when we're in a bear market. So a bull market, like you see here, is a long-term bull. You see, we have more green. A lot of stocks are closing higher compared to the stocks that are dipping. And you can see right from 2020, the market started its long-term bull in 2020. So we have been in a bull market for 5 years. 5 years. So if you see that some of your stocks are up by 300, 400%, 1000%, it's because we have been in a bull market for 5 years. So all you need to do is to always check whether the trend is changing or intact. So personally, I like to call up my trend line to help me run a check on when the long-term bull will end. So you can see right here, as long as the NSE market is still above this major trend line, then it means that we are still in a long-term bull. But in between, there's going to be a pullback. So that's why we have the short-term bear. So I'll discuss that shortly. Now, there are four types of trend. There are four types of trend. Now, the bear market can also be short term or long term, like I told you before. Now, in investing, there are four types of trend I want you to watch out for. Now, this is where my secret is coming from. This is where I make a lot of money in the Nigerian stock market. Now, because I understand these four types of trend. One, we have the short term bull and long term bull. Now, this is where the market is in a very strong uptrend, like this. You can see here is a very strong uptrend. And then on the short term, the market is also in a very strong uptrend. So you can see short-term bull and long-term bull. So that means in the short term, meaning if you buy stock and hold for 3 to 6 months, there's tendency that you might make money in the market. And if you decide to hold from 1 year to 5 years, there's also higher tendency that you're going to make money in the market. That's what we call the short-term bull and long-term bull. Now we have what we call the short-term bear and the long-term bull. That's a typical example of a market that we just concluded. Now look at this here. On a long-term frame, which is the monthly time frame, the market had been in a long-term bull. So generally, the NSE had been in a long-term bull. You can see right here, right here. Now, when we then drill down to our lower time frame, maybe like weekly or daily, we also want to run a check. So right here, you can see this pullback here that we're noticing here. You can see this is a minor pullback. But what are we watching out for on a lower time frame? We are watching out for what we call the market structure. Market structure is where you have higher high, higher low. So here you see high, low, high, low. You can see as long as the low attained is above the previous low, it is still in a short-term bull. So we are still in a short-term bull and long-term bull because the market is still giving us the higher high, higher low structure on both the higher time frame and the lower time frame. This is lower time frame, this is the higher high, higher low. And then if you drill down to our higher time frame, you can see we have a higher high, higher low, higher high. You can see this high here, this low is higher than this high is higher than previous high. This low is higher than previous low. This high is higher than this low. You can see then we have a new high higher than this. We have a new low. So as long as we have a higher high, higher low structure on both the long term on both the long term and short term, then we are in a short term bull and long term bull. Then we have what we call the short term bear and long term bull. The short term bear and long term bull. Now, the short term bear is the long term bull, like I said, is still the monthly time frame, like you see here. So the NGS market is still in a long term bull. So meaning anybody that is looking to invest for a long time can still go in the market, but it has to do it strategically. And I tell you what I do. So when we move to the next trend. Now, when you then come down to daily time frame, you will notice that there was a period where we no longer have the higher high, higher low structure. Like here within this period, you can see right here, we have okay, here we have a high, we have a low. You can see we had a high that was less than or lower than previous high, and then the market drop again. The low is lower than previous low. So this was the beginning of a short-term bear right here. Short-term bear. So we had a short-term bear in the midst of a long-term bull market. Look at the long-term bull right here. You can see here. So this is the second one here. We have short-term bear and long-term bull. But what I love about these two trends is that as long as we're in a long-term bull, then the tendency of your stock going up is very high, meaning that the longer you hold your stock, the higher chance that you will make money. Why? Because we are still in a long-term bull. So the short-term bear is good for entry. If you are looking to invest for a long time, you wait for the market to pull back and then enter. The short-term bear is also good if you're looking to trade, because on the word short term, it means it's just going to last for a few days or even 1 to 3 months. And then the next thing we are back to a bullish market. So like we see right here on NSC All Share Index, you see that there was a time we had a pullback. Now, what I see online is just so funny. Now a lot of people just assume that oh the market is back to a bear. Even some notable brands, like I don't want to call name, notable newspaper, they'll tell you, oh, the NSE is on the bear close. The bear market is not characterized by just 1 month move or 1 day move. No, you look at the structure. It is structure that tells you whether we are in a bear market. It is not whatever happens in a day. So right here, this was just a normal pullback. So what we saw from February, 14th of February down to May was just a minor pullback. The NSE All-Share Index was still in a short-term bull. Why? Because we had our higher high, higher low structure intact. Assuming that when the market dropped, it dropped below this previous low of 100,000 basis points, that would have changed the structure to a short-term bear. So meaning we'll most likely be in a short-term bear and in a long-term bull market. So what should you be doing in a short-term bear market? You are looking to buy dividend stock. You're looking to buy good stock at a low price, because we are still in a long-term bull market means there's tendency the market will go up. So what you focus on in the market is whether we are still in a long-term bull. That is what should define whether you should be going to the market or not. If you enter the market when we're not in the long-term bull, which is long-term bear, the tendency that you will lose your money is very high. So don't just look at people that are making good money in the market and want to jump in because you feel, oh, some people made 10,000, 1,000% or whatever. Always ask yourself whether we're in the long term bull, because the reason they made that money was because we are in the long term bull. The moment this long term bull ends, I tell you, it will be difficult. We've had that scenario many times. Let me show you sometimes in the past where we were in a long term bear and the NSC market was just dropping. Like here, this is it here. You can see we had a high here, right here, and then you saw at some point this low was broken right here. So this period that we saw this market dump, this was between 2018 down to 2020. For 2 years, the NSE market dumped. Go and check. Not many stocks did well within this period. Some crashed, some went down. A lot of investors lost money because of this market dump until the NSE market picked up and started giving us higher, high, higher low structure. So the single reason people make money in the market is direction of the market. So that's very important. Now we had short-term bull and long-term bear. What should you be doing? In a short-term bull and a long-term bear, you can buy a stock, but you don't hold for a long time. Why? Because at the end of the day, this bear market will drive the direction of the stock. So in short-term bull, you just buy and go for minor gain, maybe like 10, 15, 20%, you leave the market immediately. In short-term bear and long-term bear, you are out of the market completely. You don't even go close to the stock market at all because except you have free money to dash, except you have for Christmas and you have excess money to give out to people, then you can then go to the market because within this short-term bear and long-term bear, a lot of stocks are going down. Except you have the mind to hold it, except you have the mind to say, "Oh, I want to buy into good businesses that are going down." Fine, you can go in, but then you cannot time. You cannot tell exactly when the market will pick up. So I have to share this for you to understand the kind of courses I teach in the ETC section. These are some of the course outline that I teach in my ETC section. So ETC section is starting next month, and part of what I teach them is how to spot a short-term bear and long-term bull and a short-term bull and long-term bear. The best time to buy a stock is when the market is experiencing a short-term bull and long-term bull and short-term bear and long-term bull. Anything outside these two, you stay off the market. So the Nigerian stock market had been going through this for a long time, the last 5 years. That is why a lot of stocks are up. So I teach this. And then apart from that, I teach how to spot this kind of opportunities in the market. There are tools you need to check the market, whether we're in a long-term bull or short-term bull or long-term bear or whatever. And I teach all this. Now, this will help you improve your confidence in the market. When I'm going to the Nigerian stock market, knowing fully well that, oh, we are in a long-term bull and short-term bull or short-term bear, then I am confident enough to buy good stock and then hold them. So even if the market is going down, because I have a proper understanding of what's happening in the market, I can tell when the market is about to go down. That's why if you've been following my community for a long time, you will see how I have been updating them multiple times on how the market is reacting at various key level. Oh, I will tell them, oh, once the market breaks out of 105, 106 basis points, we are back to bear. All those things are there to guide you. Do you understand? Providing guidance so that you're not asking yourself whether the market is in a bear, whether the market is going down or the market is going up. If I see any change where I think the market would likely be crashing, I would alert everybody in the community and I would tell them it's time to sell off and move on to an alternative market. So right now, you see that the market is actually approaching previous high. Now, there's something happening right here that you need to pay a lot of attention to. I want NSC, with this minor move, we are not back to a proper bull. Yes, this is just the beginning. So even if you see some stock recording 10%, 20% because of impressive return, we have not started the proper bull run. Yes, we've only had signals that, oh, the market is likely trending higher. What do we need for us to confirm that, oh, we are now back to a proper bull run where stocks are going to fly? It is when we break out of previous high. Remember, in a short-term bull, we're looking for higher high, higher low. So now that we have a higher low that is higher than this, we need the market to break out of the previous high. What's the previous high? 109,850 basis points. Once the market breaks out right here, then we are back to a bigger run. That's where we're going to see a lot of stocks flying higher, doing good numbers in weeks and months to come. And this is what I update them in my community. So once the market breaks out, we are going to be having our webinar this weekend, and I'm going to share a lot of insights and the type of stocks to watch. There are stocks I already have my watch list that I'm going to share with them, from dividend growth stocks to penny stocks to growth stocks to buy. These are stocks that have good potential. These are stocks that have shown that 2025 is going to be a year of increased return for shareholders. And then we're going to buy them and hold. Some we're holding them for dividend and capital appreciation, and then some we're holding them for strictly for capital appreciation. But then I want to see the market break out of this for us to confirm. But what happened if the market fails to break this? Then there is a challenge. If the market fails to break the 109,000 basis points, then we have what we call a double bottom formation and double top, sorry. So if the market rises from here, touches here, and fail to break, and the market pulls back like this, then this is the beginning of a bear market. Why? Because the market had failed to form a new high, which is double top formation. And then when you see M pattern like this, M pattern at a major key level, it's a bearish sign. Just like I showed them in March on W pattern on exchange rate. Let me show you that signal again. USD NG. I want to show you the difference between M pattern and W pattern. Now look at W pattern here. You can see this looks like a W right here. W pattern at the support level is a bullish sign. You can see this was when I alerted everybody to buy, and then you can see exchange rate has been trading higher. And then M pattern, because if you turn the W upside down, it becomes M. Now you can see M pattern at a resistance is also a bearish sign. So if NGS fails to break out of 109,000 basis points, and you're seeing M pattern like this right here, I will be very, very careful. I will be very, very careful because this might mean that the market is about to go down. And then that means if the market breaks out of this, this is a new low that we have right now. This is a new low. So if the market breaks this low, then it means we are back to a short-term bear. Now, that short-term bear does not negate the fact that stock might go up, but you have to be strategic right now. Strategic means that I will have to focus on hottest sector in the market, which I have been telling them and which I'm going to show them this weekend. So if you're going to join our community, this is a perfect opportunity to join us because we'll be having our webinar this weekend. In this webinar, you will see me break down the market. You see me share stocks that we're trading. You see me share new stocks and opportunity. In short, I just posted one stock yesterday. It's part of the stocks that I'm going to be talking about. You can see here, May 7th. You can see right here, I posted this stock yesterday as a new recommendation. And this company did well in their Q1 numbers. So that is what you should know on ETC. So let's continue. Now, why is trend important? Some of you would ask, why should I pay attention to trend? All this you have been saying, is it important? Yes, it is important. First reason, it gives you early sign of market moves, whether to the up or downside. So you can see that when you follow trend like this, you are able to have that early sign, early advantage on where the market is going to. And let me tell you the truth, which is part of the point I'm going to share. No matter how big your profit is, whether it's 50%, 70%, 80%, 100%, the simple truth is that 90% of the wave, 90% of the move you need for your stock to go up is driven by the overall market. It is not your stock. 90%, a significant number. If I want to be fair enough, I would say 70% is attributable to the market, 20% to the sector, while 10% is stock. So don't always think that the bullish or the gains you see in the market are driven by just the company you own. No, it is not driven by the company you own. It is driven most of the time by the state of the market. If the market is, if we're in a bear market, no matter how good your company is, it will also go down. It will suffer. Do you understand? So that's why whenever you're trading a stock, always understand the state of the market. So when you follow trend like this, it gives you early sign. Imagine being able to know when we are going to be in a bull market or bear market. Just imagine what I share right now with you. I already have an insight. I already have early advantage. So while the market is going up, the moment I see that the market is not able to break the 109,000 basis points and the market drops, what am I supposed to do? I'll start readjusting my portfolio immediately because I notice a sign that the market might be going down. But the moment the market breaks out of 109,000 basis points, what should I do? I'm going to be increasing my position more and more because I know we are going into a short-term bull. Overall, the market is in a long-term bull. That's a constant thing. And I've shown you the region where we might probably see the end of a long-term bull, and that's if the market breaks below this trend line. So you can see that the market is strongly above it. So what are we looking for? If the market is not able to break and the market jumps hard into this region, then it means we are going to be in a short-term bear, but in a short-term bear and still in a long-term bull market. Now, if we see any sign of reversal around this trend line, then it's time for us to enter again. But if the market breaks out, then the short-term bull continues while the long-term bull continues. So this is knowledge. This is understanding trend in the market because it helps you know when to buy. Early advantage. So you're not just going to the market and then you're buying random stocks without understanding what is happening. You must know what is happening in the market because at the end of the day, whatever you do with your money will be driven by the big money managers, and the big money managers are the one moving the market. So second point, it tells you when to sell a significant number of your stock and go cash. Sometimes people don't know that holding cash is a strategy. Holding your cash, holding your portfolio as cash sometimes can be more profitable than buying stock. There are times where you hold, I have a significant number of my portfolio in cash. And then if I look at what the market has done, how the market has fared, I would even be more profitable, meaning even at zero return, because my brokers is not giving me any interest on that cash. Even at zero return, I have even outperformed the market. Why? Because from the period I sold to when I went to cash, the market had dumped. So meaning I would have lost more, but because I was strategic, I didn't lose, meaning I outperformed the market. So sometimes holding your portfolio as cash is profitable, but knowing when to do so depends on your understanding of the state of the market at that point. Like I said, if I see any sign that the market is going to dump, what should I do? I will go cash. The only one I would likely be holding are dividend growth stock because I know these ones have good return. By the time they declare higher dividend, people are going to rush in back. So I'll buy them at the lower end of the market. But the growth stocks, I'm going to wait a little bit for more bullish signal. You see, sometimes in this market, it is knowledge. It is knowledge that would help you to be ahead of people. Like I always say, use your head to stay ahead. Understand when to stay in the market, when to be in the market, know when to enter the market, and know when to exit the market. This is what you need to make money. Because if you go into the market randomly without knowing whether we're in a bull or bear market, this chance of you losing is high. Oh, some of you will say, I want to go in as a long-term investor. I don't want to care. I don't care what is happening. Let me tell you the truth. You will say all that, but the moment you enter the market, that's when you know that your emotion and you are different. But then you log into your portfolio and you see that you are down first by minus 30%, minus 40%. That's when you will know. Your emotion and your number one enemy in this market is your emotion. So why not do things that would increase the chance of you being profitable early enough than you buying a stock and then you're seeing that you're down. You're telling me you want to do long term. You want to do long term, a time will come when you log into your portfolio and you're not up yet. You'll be thinking, should I sell? Should I sell? Should I sell? Should I sell? In short, funny enough, I've seen people who say they buy a stock for long term. And then because some of their long-term stocks are up by 30, 100%, 50%, they'll come to my DM and be asking me, should I sell? In short, I ignore those kind of questions. Because if you're a long-term investor, stick to a long-term investing. Stick to long-term investing. If you're a trader, stick to trading. Don't tell me you bought a stock for long term and then because you're up by 50%, you're not asking whether you should sell or not, then you're not an investor. As an investor, you focus on value. As an investor, you focus on holding your stock for a longer time. As a trader, you focus on growth. When you see your portfolio up by a significant number percentage, you sell and then move on, compound your return, and then you continue. Then the third one, you can also spot the best time to accumulate stock for massive gain, which is exactly why I'm sharing this video. You knowing when to buy, knowing the best time to accumulate the stock is very, very important. Knowing that is very important. Like I said, I'm watching. If the market breaks out, I know there are a lot of stocks that are at the bottom right now. Even some of the stocks you see that are at the top that are doing 10%, some of them are still at the bottom. Some of them are also already at the top. So don't think that once a stock hits 10%, then it's time for you to buy. Or maybe you've seen it done 10% back to back. Some of you are only buying a stock in a bootstrap. Some of you are buying a stock because you don't want to miss out. And the simple truth again is a lot of people are using it to take profits. While you are buying, some institutional investors are exiting the market gradually, but you don't know. Why not focus on the stocks that are still at the bottom of the market? Why? Because the ones at the bottom have limited downside. He that is down, fear no fear fall. Your risk is very, very low, while your upside potential is high. So that is it on the fourth point. Then, like I said, 90% of the waves that drive your stock upward comes from the overall market. So don't think that when you buy a stock, it start going up. The reason your stock goes up is because the market itself is driving it, is pushing it. When we're in a bull market, you see that a lot of stocks are going up. So there's a wave in the market that drives stock prices. It's good you buy that stock when the wave is to your favor. But when the wave is coming down, whether you buy a good stock or not, it will dump. So always look at the wave driving the market at that point. That's the best time to enter the market. I like to buy a stock at the end of a bear, so at the end of a pullback. Like right here, you see the market ended here. I alerted them that once we see a close above 106,000 basis points, I've been posting this like 2 weeks ago. That once the market closes above 106,000 basis points, then we're going to see a bigger move to 109, and that's what's already happening. Now, if the market breaks out of 109, we are now back to a proper short-term bull market. So you can see that all these things that we are seeing in the last 1 week is not even a proper bull. We are not in a bull market yet. It's just a sign that the bull is showing we are moving into a bull market. When the market breaks out of this previous high, then we're not going to see a new high, because a bull market is characterized by higher high, higher low. So right now we are waiting for a new high to fall, and then the market will already move. We've already seen a higher low. What we want to see is a higher high, then we move into a bull market. Don't miss our webinar this Saturday by 7 p.m. because I'm going to share a lot of stocks that you should be buying right now. Even if their price go down, mop up average down, because after this Q1 result, I have seen stocks that would beat their previous year. It's as simple as that. So you don't want to miss this webinar this weekend and then get insights on what to invest in. All right. So when you're also looking at the market, don't also fail to look at subsector. Subsector. What are subsectors? This is NSE All Share Index. The subsectors are sectors like the NGS banking. So this is NGS banking. You can see here, look at what NGS banking is doing at this point. Um, so NGS banking index is a collection of all the banking stocks. So you're able to check what is happening in the banking sector. Is banking sector bullish or bearish? You can see how the banking sector bounced off a key level that was tested right here. You can see the bounce. So these are the kind of check I run. And then the next one is the NGS insurance subsector. I look at NGS insurance stocks to understand what is happening. I look at the NGS industrial sector to see what is happening. And one of the notable discovery is that NGS consumer goods sector had been leading the gainers path. NGS consumer goods sector, you can see right here. So the rally you're seeing right now in the market is driven by the consumer goods stock. Consumer goods stock. You see a lot of consumer goods stock pushing higher right now in the market. But like I said, most of these consumer goods stocks might be closer to being overbought. I don't like to buy a stock at the top. Many of these consumer goods stock were at the bottom last year. Many of them were at the bottom last year. In short, they were strong buying recommendation in June, especially during my ATC section, even for people that joined Glufolio. Example of those consumer goods stocks are USCN. I should discuss that. USCN around this point. Another one was Unilever again at this point. You can see here, right here. Another one was livestock and so on, like that. So many of the stocks that are hitting new high today, that are already at the top right now, they were a buy 1 year ago. So don't follow stocks that are already at the top. Now, if you jump on those stocks, you have to be very careful. Some of us have already keyed in at a lower price. Like USCN is already doing close to 120%, 30%. Unilever is doing more than 100%. Like, so don't buy stocks that are already at the top. They will be flashing buy, because when you see them hit 10% gain on your screen, you'll be tempted to buy. But the truth is that what you should be buying are stocks that are at the bottom that are looking to pick up. These are the stocks that will give you a lot of upside potential in the next 6 months to 1 year. So focus on sub-sector events, understand trends that is driving that sector, read news, follow newspaper, follow paper headlines, follow government policies, follow events, follow macro events. They would give you an idea. So when I see my technical analysis and fundamental analysis of the market aligned, especially when a stock is following the trend, both in technical, I'm seeing a buy, and then when I look at the fundamentals of macro events, I see how that will support an uptrend in the market. Then I quickly alert everybody to buy into the market. So this is how you invest in the market. Don't go to the market blindfoldly and then you're looking for random stocks to buy. No, go to the market with accurate knowledge. And accurate knowledge comes when you join a community that knows what they are doing. When you join a community with track record. If you want to join Glufolio, kindly go to glufolio.com/subscribe. Pick a plan that works for you. We host webinar, like I said, monthly webinar. I've been hosting webinar back to back from January, February, March, April, May, June, July, August, September, October, November, December. Imagine joining a community where they host webinar every month. That's value for money. Now, the essence of the webinar is to guide you on the state of the market. I look at macro events and then how they translate to event trading opportunities and investing opportunities in the stock market. And then I use that to pick the hottest stocks. And then from hottest stocks, I tell you the specific company to watch out for. That is how we invest in Glofolo. If this is the first time you're watching my video, kindly hit the subscription button and turn on the notification bell so that when I release important video like this, you'll be among the first to get notified.